Imagine if the crypto market was never truly random. Every price swing, every sudden spike in volume, and every massive transfer leaves a trail behind. The problem is, most people don't know how to read it. In this video, we'll break down how on-chain analytics and AI work together to uncover the hidden patterns behind smart money movements. Who is moving capital, where it's going, and why it happens before the market reacts. If you want to understand how institutions and top traders see the market ahead of everyone else, make sure you watch this video until the end. The problem with modern crypto trading. Most people think crypto trading is about charts, candlesticks, indicators, support and resistance. Green candles mean buy, red candles mean panic. But here's the uncomfortable truth. By the time most traders see a signal on a chart, the real move has already happened. The biggest players don't trade on indicators alone. They trade on information asymmetry. They know who is buying, who is selling, where the money is flowing, and what smart wallets are doing before the price reacts. And in 2025, that edge no longer comes from intuition or experience alone. It comes from AI-powered on-chain analytics tools. Tools that turn raw blockchain data into actionable intelligence. Today, we're breaking down why traditional trading tools are no longer enough, how AI is reshaping crypto analysis, and which platforms are defining the future of crypto trading in 2025. If you've ever felt like the market moves before you do, this video explains why. Why on-chain data changed everything. Unlike traditional financial markets, blockchains are radically transparent. Every transaction, every wallet movement, every token transfer, it's all public. But transparency doesn't automatically mean clarity. Raw blockchain data is massive, fragmented, and unreadable for humans at scale. Millions of transactions happen daily across Ethereum, Bitcoin, Layer 2s, DeFi protocols, NFT marketplaces. Looking at raw data without tooling is like staring at satellite imagery without knowing geography. This is where on-chain analytics emerged. On-chain analytics platforms translate blockchain activity into wallet behavior, capital flows, accumulation and distribution patterns, smart money tracking, but even that wasn't enough because data without interpretation is just noise. That's where AI enters the picture. From data to intelligence, the role of AI. Akasatu doesn't just read blockchain data. It connects behavior across time, wallets, chains, and market conditions. Blockchains generate enormous volumes of raw data every second. Transactions, contract interactions, wallet movements, bridge transfers, and protocol activity. On its own, this data is meaningless. It doesn't explain intent. It doesn't reveal strategy. And it certainly doesn't tell you what matters. AI-powered tools transform this chaos into structure. They do this by identifying patterns humans can't see, operating at a scale humans can't process, and learning continuously from historical outcomes. One of the most important capabilities is wallet clustering. On-chain, a single entity rarely uses just one wallet. Funds are split, rotated, and routed through multiple addresses to reduce visibility. Akisatu models analyze transaction timing, gas behavior, interaction patterns, and address relationships to infer which wallets are likely controlled by the same actor. This reveals the true size and behavior of whales, funds, and institutional players, not just isolated addresses. Then there are behavioral fingerprints. Every trader, fund, or protocol has habits. How they enter positions, how they scale in, how they exit, whether they bridge assets before selling, whether they accumulate during low liquidity hours. Akisatu learns these behavioral signatures over time and flags when similar patterns begin to emerge again. Historical trading patterns add another layer of intelligence. AI doesn't just store history, it contextualizes it. When a certain sequence of actions has previously led to a price breakout, liquidity drain, or sudden reversal, Akisatu recognizes the setup before the outcome repeats. This is not prediction in the traditional sense, it's probability-weighted pattern recognition. Cross-chain movement correlations are especially critical in modern crypto markets. Capital rarely stays on one chain. Funds move from Layer 1 south to Layer 2 south, from DeFi protocols to centralized exchanges, from bridges to stablecoins. Akisatu tracks these flows across ecosystems, identifying when liquidity migration signals risk, opportunity, or narrative shifts. All of this feeds into probability-based forecasting. Instead of telling traders what will happen, AI estimates what is more likely to happen based on thousands of prior scenarios. This reframes decision-making from certainty to risk management, a mindset used by professional trading desks, not gamblers. So instead of asking, what just happened? Ace Hunt asks, what usually happens next when the market looks like this? That question changes everything. It marks a fundamental shift from reactive trading, where decisions are made after price moves, to anticipatory trading, where traders position themselves before narratives go public and volatility explodes. And this shift explains why AI-powered crypto tools are no longer optional. In markets that move at machine speed, human-only analysis is structurally disadvantaged. AI doesn't replace judgment, it augments it. At this point, these tools are no longer competitive advantages. They are becoming survival tools. What makes a crypto tool AI-powered? Not every platform that says AI Kasatu actually uses it meaningfully. True AI-powered crypto tools typically include 1. Behavioral wallet analysis. Ekasatu identifies clusters of wallets controlled by funds, whales, market makers, insider-linked entities. This goes far beyond labeling a single address. 2. Pattern recognition at scale. Humans miss weak signals. AI thrives on them. Subtle accumulation, gradual exits, liquidity probes. 3. Predictive insights. Not predictions in the crystal ball sense, but probabilistic modeling. What usually happens after this pattern appears? 4. Noise reduction. AI filters out irrelevant transactions so traders focus on meaningful flows, high-impact wallets, critical moments. Nansen, the gold standard of smart money tracking. One of the most recognized platforms in this space is Nansen. Nansen combines on-chain analytics, AI-driven labeling, smart money tracking, token flow analysis. Its core value proposition is simple: follow the wallets that matter. Nansen doesn't treat all wallets equally. It identifies venture capital wallets, exchange hot wallets, DeFi power users, NFT insiders, high-performing traders, and then tracks what they do before the price reacts. For example, if smart money begins accumulating a token quietly, AK Satu detects repeated accumulation patterns, entry timing consistency, wallet behavior similarity. By the time the narrative hits Twitter, the positioning is already done. This is the difference between information and intelligence. Why at AK Satu? Tools are changing trader psychology. Traditional trading is emotionally exhausting. Fear, FOMO, confirmation bias. AI-powered platforms don't eliminate emotion, but they anchor decisions in evidence. When traders see historical context, probability-weighted outcomes, wallet-based confirmation, decision-making becomes calmer, less impulsive, more strategic. This is why professional desks increasingly rely on AI-assisted tooling, not intuition alone. The rise of multi-platform intelligence. Modern AI tools no longer operate in isolation. They don't look at one chart, one blockchain, or one market segment at a time. Instead, they function as intelligence layers, systems designed to synthesize signals across the entire crypto ecosystem. Because in today's market, no more meaningful capital movement happens in a vacuum. AI-powered platforms now integrate data from multiple environments at once. DeFi protocols, where liquidity flows reveal early positioning. NFT marketplaces, where shifts in speculative appetite often precede broader market sentiment. Cross-chain bridges, which expose capital migration between ecosystems before narratives emerge. Centralized exchanges, where inflows and outflows hint at accumulation, distribution, or imminent volatility. And in limited, carefully filtered ways, social sentiment, used not as truth but as a timing signal. This convergence creates something far more valuable than prediction. It creates situational awareness. Situational awareness means understanding the market as a living system, not a static chart. X-Satu tools help answer deeper questions. Who is moving capital? Retail users, funds, insiders, or protocols themselves? Why now? Is this reactionary, strategic, or preparatory? From where to where are funds consolidating, diversifying, or fleeing risk? And most importantly, what does history tell us about similar movements in the past? When capital leaves centralized exchanges and flows into specific DeFi protocols, Akisatu can recognize whether that pattern previously signaled accumulation or distribution. When assets bridge from one chain to another, Akisatu evaluates whether similar migrations historically preceded ecosystem growth, liquidity extraction, or speculative cycles. When NFT activity spikes while spot markets remain flat, Akisatu assesses whether this divergence previously marked early risk-on behavior or short-lived speculation. This is not about forecasting prices, it's about contextualizing behavior. Retail traders often react to surface-level signals, price moves, headlines, trending narratives. Institutional players operate differently. They observe flows, they interpret intent, they act before narratives solidify. Multi-platform intelligence allows AI tools to mirror this institutional perspective at scale, compressing complexity into interpretable insight. The result is a fundamental shift in how traders engage with markets. Instead of asking, "What is the price doing?" they begin asking, "What is the system doing?" And that shift from reaction to comprehension is what defines the next era of crypto trading. Aingesatu, tools don't make you rich, they make you informed. Here's the uncomfortable truth. Angesatu, tools do not guarantee profits. They do something more important. They reduce blindness. They show when you're late, when a move is crowded, when smart money is exiting, when narratives don't match flows, and in volatile markets, what you avoid matters as much as what you trade. The future of crypto trading. Crypto markets are evolving from speculation to strategy, from charts to behavior, from reaction to intelligence. In 2025, the edge belongs to traders who understand that data is everywhere, insight is not. AI-powered on-chain analytics tools are no more longer advanced. They are becoming the baseline. And the question is no more longer, should I use them? But how long can I afford not to?